Welcome back to Investing Talk Podcast. We're here to help you cut through all that information overload and really zero in on the key insights you need, and fast. Today, we're diving deep into a question we know is on some minds. Is now a good time to buy Vicarious Surgical? You've sent us a great set of sources, really detailed stuff covering fundamentals, technicals, sentiment, the whole picture. So our mission today, unpack all of that, give you a clear, concise understanding of Vicarious Surgical's investment profile right now, and help you figure out what really matters here. Oh, and before we really jump in, if you find this helpful, please do subscribe, like the video, leave a comment. It honestly makes a huge difference for us. And hey, if you're feeling extra generous, you could always consider buying the team a coffee. The link's below. Also, let us know in the comments if there's another company you'd like us to give this deep dive treatment to next.
Yeah, thanks for that. And looking at Vicarious Surgical, well, evaluating these early stage companies, especially in med tech, it's always a bit tricky, isn't it? So we really appreciate you sending over these sources. Our goal here isn't just to, read off numbers. It's about connecting the dots for now, understanding not just what the data says, but why it matters and maybe what big questions it raises. We want to give you that comprehensive, unbiased view so you can form your own informed take on Vicarious Surgical.
Absolutely. So let's start right at the beginning. Set the stage a bit. What exactly does Vicarious Surgical do? What's their main thing, their core innovation?
Right. So Vicarious Surgical is in the robotic surgery space, specifically single port systems. Their big idea, their core innovation is pretty ambitious, actually. They talk about wanting to virtually transport surgeons inside the patient. It's about giving surgeons this almost unprecedented sense of presence during minimally invasive procedures, a different way to see and work.
Virtually transporting surgeons inside. That definitely catches your attention. Sounds almost sci-fi, but, potentially groundbreaking for surgery. Okay, so with that kind of forward-looking idea, how does the company look right now on a fundamental level? Like, what are the actual numbers telling us?
Fundamentally, well, it's very much an early stage picture. The sources show no reported revenue on a trailing 12-month basis.
No revenue at all yet. Oh.
Exactly, which, isn't totally out of the blue for a company still developing complex medical devices like this. But on the other side of the ledger, there's a significant net loss reported, about $61.62 million. And the earnings per share figure reflects that. It's deeply negative at minus 10.44. So clearly ongoing unprofitability.
61 million loss, negative EPS.
Got it. And when you look at the market cap, it's relatively small, around, $45.79 million. Combine that with the persistent losses, and it points to a financial cushion that's likely, limited, pretty typical for early-stage med tech, high cash burn.
Makes sense. What about where they sit in the industry? You mentioned the innovation, but who are they up against?
Competition. That's key. While the virtual transport idea sounds innovative, maybe a technological edge, you absolutely have to remember this is a highly competitive field. You've got established giants, most notably Intuitive Surgical, dominating the space. So Vicarious Surgical's competitive moat, the real advantage, is still very much in the early days. It's largely unproven in the market.
Right. So summing that up, cool innovation, early stage, no revenue yet, significant losses, and facing off against huge established competitors. That naturally leads to the big question, valuation. What could this company actually be worth? How do analysts even try to figure that out?
Yeah, valuation is definitely one of the biggest challenges here because there's no revenue, no profit, your standard metrics like a PE ratio, price to earnings, it's just not meaningful. It doesn't exist, basically. And other ratios like price to sales or price to book, they're either not disclosed in the sources we have or wouldn't tell you much without stable revenue or equity figures anyway.
Okay, so the usual toolbox is kind of empty. What do we have then? Analyst views.
We do have some analyst input. There are, I believe, 2 analysts covering the stock, according to the sources. Their average rating is a hold, and they have a 12-month price target averaging around $9.25. Now, compared to the current price, which has been hovering around, say, $8 to $9, that target suggests maybe a 15-20% upside. Pretty modest.
A modest upside target, okay.
Right.
But you mentioned challenges.
Right, because here's where it gets, really interesting. If you look at the forecast models, things like DCF, discounted cash flow, or relative valuation methods, the picture becomes incredibly volatile. The price estimates for 2025, they are all over the place. We're talking a huge range. The low estimate is down at about 4 cents.
4 cents, seriously.
Yeah. And the high estimate goes up to around $5.91. The average forecast lands somewhere around $2.98. But crucially, this points to a large potential downside risk. Some models suggest it could be as much as like 63% down from certain price points.
Wow. That range from basically zero up to almost $6. That screams uncertainty, doesn't it? What does that volatility tell us?
It tells you everything about the risk profile, really. For an early-stage company like this, without established products or revenue streams, that massive range reflects the almost binary nature of the bet. Either they succeed in getting funding, getting approvals, getting adoption, or they could genuinely struggle to survive. The models aren't just disagreeing on small details, they're reflecting fundamentally different possible futures for the company. It's high stakes.
Okay, so the fundamental picture is tough. Valuation is incredibly uncertain. Does the technical side, the chart itself, offer any clearer signals? Or does it just reflect that same uncertainty? What's the price been doing?
Well, technically, there has been some recent action. The sources noted a 13% jump in a single day recently, with the price trading around $9.15.
13%, okay. So moves can happen fast.
Definitely. And the 52-week range confirms that volatility. It's been as low as $4.27 and as high as $19. Quite a swing.
19 down to nearly 4.
Yeah.
Yeah, that's volatile. What about support and resistance levels?
Looking at the chart, immediate resistance seems to be around that $9.22 to $9.44, yeah, so near where it's been trading recently, and near that analyst target. Support levels look to be lower, around maybe $8.50, down to about $7.90.
Okay, practical levels for traders to watch. Any other indicators? Moving averages, RSI.
Yep. The current price is hovering near its 200-day moving average, which is around $9.54. It is, however, above its 50-day moving average, which sits lower, around $7.82. The RSI, the Relative Strength Index, was mentioned at 34.5. That's getting close to what traders consider oversold territory.
Which could suggest maybe it's due for a bounce, short term.
Potentially, yeah. It suggests the recent downward price moves might have been a bit overdone, at least in the very short term. Traded volatility was described as moderate, though it was noted that less than half the trading days in the past month were positive, suggesting kind of an oscillating momentum back and forth.
Yeah. Okay, so technically maybe some short-term oversold signals, but resistance nearby and high underlying volatility. Got it. Let's shift from the charts to the general mood. What's the recent news flow like? And what's the overall market sentiment towards Vicarious Surgical? Optimistic? Fearful?
Well, as we touched on, the analyst sentiment is pretty cautious, just that hold rating from the two covering it. Social sentiment seems a bit more mixed, maybe slightly positive. The sources flagged overall sentiment for the stock specifically as bullish.
Bullish. Interesting, given the fundamentals and the analyst caution.
It is, but you have to balance that against the broader market mood. The fear and greed index was mentioned as being low at 39, which is firmly in fear territory for the market overall. So you've got this sort of specific optimism, perhaps, among some traders looking at Vicarious, but it's happening against a backdrop of general market anxiety.
A real tug of war, then.
Yeah.
Cautious analysts, some bullish traders, but overall market fear.
Exactly. It paints a conflicted picture. Oh, and on insider activity. The sources didn't provide any specific details on recent insider buying or selling, so no strong signals there.
Okay, no insider clues. So looking ahead now, what are the potential catalysts that could actually move the stock price? And on the flip side, what are the biggest risks we need to keep front and center?
On the catalyst front, the most immediate thing on the horizon is probably the next earnings report. The forecast date mentioned was August 11th, 2025.
Earnings are always key, especially when you're looking for updates on progress.
Absolutely. Beyond that, for any company in this robotic surgery space, the big catalysts are always things like clinical trial results, FDA approvals, partnership announcements, first sales, adoption milestones. But the sources we reviewed didn't flag any specific upcoming news on those fronts right now for Vicarious.
So earnings are the main known event soon. What about the risks? You mentioned volatility.
Yes, the risk factors are significant. We've talked about the lack of profitability, the uncertainty around when or even if substantial revenue will materialize. That's a huge financial risk. Then there's that highly volatile price forecast, remember. With that potential 63% downside scenario highlighted in some models, that's a major valuation risk.
Yeah, the 4 cents possibility.
Exactly. And you also have significant sector-specific risks. Intense competition, like we discussed. Regulatory hurdles, getting FDA approval for medical devices is a long, expensive, and uncertain process. And just the challenge of convincing surgeons and hospitals to adopt a new system. Finally, a couple more practical risks. Liquidity isn't super high. Average daily trading volume was noted around 15,000 shares. That means it might be harder to get in and out of large positions without affecting the price. And its beta is 1.41. That means it's historically been about 41% more volatile than the overall market. So expect bigger swings both up and down.
Okay, high risk seems to be the recurring theme here. Financial risk, valuation risk, sector risk, execution risk, liquidity volatility.
Mm.
That's quite a list.
Yeah.
So let's try to pull this all together. If we connect all these pieces, the shaky fundamentals, the uncertain valuation, the mixed technicals and sentiment, the upcoming earnings but lack of other clear catalysts, and this high-risk profile. What's the overall takeaway? What kind of rating does this analysis suggest for Vicarious Surgical right now?
Synthesizing everything from the sources, the composite score that comes out is, well, it's a 4 out of 10.
4 out of 10. Okay, that's definitely on the lower end. Can you break down why?
Sure. Fundamentally, it gets a 3. That's driven by the no revenue situation, the large losses, the very early stage of its innovation. Valuation gets a 4. There's just no clear model, the forecasts are wildly divergent, and there's that significant downside risk flagged. Technicals come in at a 5, sort of middle-of-the-road mixed signals. Near resistance, RSI approaching oversold, moderate volatility. Sentiment and news also get a 5. Again, mixed, that hold rating versus some bullishness, all against market fear. Catalyst score a 4. Earnings are coming, which is something, but no other strong near-term triggers were identified in the data. And finally, the risk profile scores a 3, reflecting those high financial sector and volatility risks we just discussed.
Right, and a 410 overall. For a company like this, an early-stage tech venture, that low score really highlights the mountain they have to climb, doesn't it? It's not just needs improvement, it's more like, show me the proof.
Precisely. For a mature company, a 410 might signal deep trouble. For Vicarious Surgical, it emphasizes the immense hurdles, regulatory, financial, competitive. It makes every potential positive development feel almost like a make-or-break moment. It really does feel more like all or nothing than just high risk.
So let's make this practical for our listener. What does that 410 score and everything behind it mean for an investment strategy? Is this something you'd hold long-term? Is it purely a short-term trade? Or maybe something to just watch from the sidelines?
Yeah, based on everything we've unpacked, Vicarious Surgical definitely leans heavily towards being a speculative short-term trade. It might be interesting around specific catalysts like that upcoming earnings report or maybe unexpected positive news on product development or approvals. But thinking about a long-term investment, right now that looks exceptionally risky. You'd really need to see significant, tangible improvement in the financials, like starting to generate revenue or clear signs of successful product adoption before considering that.
Okay, so primarily a speculative short-term play for those with a high risk tolerance. If someone was considering that kind of trade, are there suggested entry points or risk management levels?
The technical analysis suggested potential support between $7.90 and $8.50. Entering within that zone might help mitigate some immediate downside risk compared to buying near resistance, and risk management is absolutely crucial here. A stop-loss order is pretty much non-negotiable, maybe set at 7 or 8% below your entry point. So if you got in around $8.50, you might put your stop around $7.80, for example.
Stop loss is key. What about taking profits if it does move favorably?
Take profit targets could be set near those resistance zones we mentioned, maybe around $9.20 to $9.50, or you could aim for that average analyst price target around $9.25. Given the volatility, taking profits relatively quickly might be prudent.
Okay, so to really hammer it home, this looks like a high-risk, highly speculative stock, maybe suitable for a very specific short-term trading strategy, focusing on support levels for entry, using tight stop losses, and taking profits relatively quickly near resistance or analyst targets. Definitely not a buy-and-hold situation currently.
That sums it up well, I think. Vicarious Surgical is definitely high risk, speculative. The technology sounds promising, potentially disruptive even, but it's unproven in the market, faces huge competition, and the company is unprofitable with uncertain financials. For long-term investors, you'd need to see substantial operational progress, clear wins on the regulatory front, and real signs of market traction before this picture changes significantly. For short-term traders, maybe it's a watch or even a potential accumulate near the support levels, but again, only with extremely strict risk management in place.
This has been a really insightful deep dive. It clearly lays out the potential, but also the very significant hurdles and unknowns surrounding Vicarious Surgical. It really makes you think, doesn't it? For you, our listener, knowing all of this, the exciting innovation versus the stark financial realities, what does it tell you about balancing those two things in early stage companies? How does that calculation impact your personal appetite for risk? Something to ponder. Thanks so much for joining us for this deep dive on Investing Talk podcast. We'll catch you on the next one.